Welcome back to Polished Perfections. Today, we're delving into the intricate world of mortgage refinancing. I was inspired to do this video after talking to a lender just to get the current rates, and then they tried to convince me that refinancing could save me money. Now what I was told could save me money, but after doing the math I could save even more money without refinancing based off the current interest rates. It's a powerful tool to save money or leverage your home's equity, but there are crucial pitfalls to sidestep. Join us as we dissect what to watch out for when refinancing your property and how to navigate the process with confidence. Let's kick things off with mortgage lenders. Selecting the right lender can be the linchpin of your refinancing journey. Beware of lenders peddling deals that seem too good to be true or resort to high-pressure tactics. It's imperative to steer clear of predatory practices such as exorbitant fees, coercive sales pitches, and false promises of guaranteed approval, irrespective of your credit history. Remember, a reputable lender will prioritize transparency, elucidating all costs and options without coercing you into a rushed decision. Timing is everything when it comes to refinancing. Interest rates are in a perpetual dance, so it's paramount to pounce when rates are favorable. Keep a vigilant eye on market fluctuations and be poised to seize the opportune moment. You should never rush into a refinance. Check the market from a few different sources. Making an informed decision could save you thousands in long-term costs. I am about to present some examples of what you could pay for refinancing your home. Please remember these numbers are for example purposes only. They do not include down payments, taxes, insurance, HOA fees, or any other fees that may come with a mortgage loan. Let's begin. If you take out a mortgage loan in April of 2009 for $200,000 on a 30-year fixed mortgage at a 4% interest rate, it would cost about $955 per month for the term of the loan. Let's move forward 15 years to April of 2024, and now the amount owed is $129,000 and you decide that you would like to refinance to take out some of your equity. You contact a lender and find out that the value of your home in April of 2024 is now worth $300,000. So, you would like to take out $21,000 of equity, making the refinancing amount $150,000. Now unfortunately, interest rates have gone up. In April of 2024, the current average mortgage loan rate for good credit is about 8% for a 30-year fixed mortgage loan. To refinance $150,000 for a 30-year fixed mortgage at an 8% interest rate, it is $1,100 a month. That is a difference of $145 more per month from your original $955 per month for taking out $21,000 in equity. $145 more per month does not sound that bad until you do the numbers. Here are the numbers based on the years and how much of a difference you would pay versus the two loans. On the original loan for $200,000 at 4% for 30 years, you would have paid about $144,000 in interest for a total of $344,000 for the term of the loan. Now, for refinancing your home at $150,000 at 8% for 30 years, you would pay about $246,000 in interest for a total of $396,000 for the term of the loan. Yes, numbers do not lie. Going from 4% to 8% on a loan for $50,000 less than the original loan of $200,000 drives the prices that much. So, for $21,000, is it worth refinancing and losing 15 years of payments to now reset the clock to 30 years and pay $246,000 in interest? That is more than the original loan for $200,000 15 years ago in 2009. I know this is a lot to take in, but please do your homework before refinancing. Also, there are many different types of mortgage loans and yearly options. Search online for mortgage calculators that you can plug in the numbers to get an idea of the different costs. I cannot stress it enough to do your homework before signing for any loan. Lenders may sound like your friend and make you feel like they are only there to help you. Now, I am not saying all lenders are bad, but please remember they are in the business to make money. Now, let's underscore the significance of shopping around for the optimal deal. Don't settle for the path of least resistance. Invest the time to search the rates, terms, and closing costs from an array of lenders. This meticulous approach can translate into substantial savings over the life of your loan. Moving forward, Don't overlook the minutiae encapsulated within the fine print. Prior to appending your signature to any document, meticulously peruse the terms of your refinance. Scrutinize particulars such as prepayment penalties, adjustable rate stipulations, and any concealed fees. Should something appear amiss, don't hesitate to seek elucidation or consult with a financial expert. And there you have it. By circumventing these commonplace blunders, you can ensure a seamless and fruitful mortgage refinancing odyssey. Remember to choose your lender judiciously, time your refinance astutely, scour the market for the optimal deal, and meticulously scrutinize the fine print. Thank you for tuning in, and be sure to hit that like button and subscribe for an abundance of additional insights into navigating your finances and homeownership. Until next time, take care.